Let's get right into it. Today in this explainer, we're unpacking a massive, real-world banking data breach, and we're looking at how some completely forgotten, literally decades-old laws are finally being enforced to protect your wallet and, your entire digital identity. So let's start with arguably the most terrifying question for anyone with a bank account in the digital age. If your bank's security gets compromised, is your money actually still safe? Or are your life savings suddenly just up for grabs? And look, this isn't just some hypothetical fear to keep you up at night. Just this week, the Bank of Baroda had to publicly confirm a major breach. And the crazy part? It didn't come from some highly sophisticated Hollywood-style hack of their mainframes. No, it happened through a compromised employee email account. Just one single vulnerability. But that was enough to result in unauthorized access to what dark web intelligence claims is over 700 gigabytes of sensitive files. We're talking customer details, identification documents, loan papers, the whole shebang. So here's how we're going to break this down. First, we'll look at the Bank of Baroda breach itself. Then we'll explain these multi-core cyber penalties, move on to awakening this so-called dead-letter law, explore the role of the adjudicating officer, and finally wrap up with exactly how to protect your digital identity. All right, moving into Section 1, the Bank of Baroda breach. Are their core systems actually secure? I want you to think about this powerful metaphor from a cybersecurity expert we sourced. They said, the leak is the loaded gun, phishing is the trigger. That really hits the nail on the head, right? Because even if a bank's core transactional systems are completely locked down and perfectly safe, leaked personal data hand scammers the absolute perfect script. A data leak itself doesn't drain your account. But when a fraudster calls you up and casually reads off your exact loan details or your Aadhaar number, suddenly they sound incredibly convincing. And this reality pulls us right into what you could call the complex cyber matrix of the law. This is where corporate negligence finally meets some severe regulatory fury. Because when massive data leaks like this happen, authorities don't just sit back and watch. They unleash a whole matrix of penalties. Which brings us to Section 2. Multi-core cyber penalties explained, and the true cost of a breach. Now, under the Digital Personal Data Protection Act, or the DPDP Act for short, this staggering number on your screen, 250 crore rupees, that's the absolute maximum penalty a company can face for failing to take reasonable security safeguards. To put that into perspective, that is a massive, crippling fine for negligence. Plus, the regulatory machinery for handing out these kinds of penalties is formally switching on very, very soon. But the really crucial point here is that regulators don't just hand out one single fine and call it a day. Oh no, they look at aggravating factors. Failing to comply with strict mandates can lead to massive, escalating fines from multiple different authorities. Like just failing to report a breach? That can cost an additional 200 crore under the DPDP Act. On top of that, India's cybersecurity agency, CERT-In, has a mandatory 6-hour reporting window for cyber incidents. Miss that, and you're in trouble. The Reserve Bank of India can slap on its own supervisory measures and penalties too. And, if that wasn't enough, Section 43A of the IT Act exposes negligent companies to direct compensation claims from the actual victims. Okay, let's jump right into Section 3, awakening the dead-letter law and ending a 20-year legal vacuum. This is where the story gets really wild, honestly. It brings up a staggering 2-decade administrative delay in the state of Jharkhand. Way back in 2003, the central government mandated that states absolutely must appoint adjudicating officers to handle cyber complaints. But this crucial mandate remained a complete dead letter in Jharkhand for over 20 years. It literally took a public interest litigation exposing this massive vacuum and finally a monumental high court ruling in April 2026 to force the state's hand into actually operationalizing this office. And during the hearings, you'll never guess what happened. The state actually tried to blame bureaucracy. They claimed that, well, the standard operating procedures were still being drafted. But the division bench completely and unequivocally rejected that excuse. The court basically laid down a fundamental principle here. Public accountability cannot be paused. They ordered the state to start receiving and deciding complaints within 1 month, period. No more excuses. So moving on to Section 4, the role of the adjudicating officer, or basically your new cyber rights hero. So what exactly is an adjudicating officer? Well, this specific role is meant to provide a highly competent, specialized, and most importantly, accessible forum for you to claim damages for devastating crimes. We're talking identity theft, phishing, and data leakage.
Appointed under Section 46 of the IT Act, these officers essentially have the exact same powers as a civil court, and they can adjudicate claims for damages up to 5 crore rupees.
And if you're wondering how much it costs to get this justice, just look at this tiered financial structure. It proves exactly how accessible these complaints are meant to be for everyday citizens. You do not need to be a millionaire to file a claim. The fees are clearly tiered and scaled based on the damages you're actually seeking. This is a huge deal because it ensures that this legal remedy transitions from just some statutory illusion on a piece of paper into a functional, highly accessible reality for anyone who has suffered a quantifiable loss from a cyber default.
Which leads us to our final part, Section 5, Protecting Your Digital Identity. These are the immediate action steps you can take today. Look, cybersecurity experts are very clear about this. Do not wait for confirmation that your specific data was caught in a leak like the one at Bank of Baroda. You need to act like it's real right now. So take these 4 immediate steps to disarm the scammers. First, change your net banking and mobile banking passwords immediately. Second, enable and monitor all your transaction alerts carefully. Third, absolutely avoid clicking any links in unexpected emails or texts claiming to be your bank. Always type the bank's URL directly into your browser. And fourth, lock your Aadhaar biometrics online via the UIDI portal or the May Aadhaar app. Literally, it takes just 5 minutes, and it shuts a door that identity thieves absolutely love to walk through. And that brings us to our final thought. A data breach might not be your fault at all. And sure, your bank might end up paying hundreds of crores in regulatory penalties, but at the end of the day, the scammers are banking on your inaction. So what does this all mean for you? Are you taking the 5 minutes required to lock your digital doors and protect yourself today?